Good morning, everyone. David Paul speaking. I'm the managing director of the VectorVest in the UK. Today I want to try have a look at, first of all, the US markets, and then have a look at three investments that I think can prosper, certainly in the short term. So let's kick off with the VectorVest composite of the USA markets. Now, the candle plot that you see in front of you is a equally weighted index of the 8,000 odd shares that we follow on the American markets. And superimposed on that, I think you should be able to see green and red triangles, and those are our medium-term market timing signals. That signal is positive at the moment and has been positive since the 6th of April. However, the market is overbought, and the blue and the green line studies in the window below the price, they are moving down from a massive overbought situation, and that's a worry. So I think that this trend that started at the end of March, where we got our buy signal on the 6th of April, the trend is mature, but it can certainly have one last go on the upside. I'm holding my positions. I've spoken about my positions on this program before. I'm still holding my positions. I think that if we were to get a DEW sell signal, which is preceded by these levels of being mega overbought on our momentum indicators and our breadth indicators, that signal needs to be taken very seriously. But it hasn't fired as yet. That's the S&P 500, folks. That's a weekly chart as of last Friday's close. And it's stopped at a 78% retracement of the sell-off in February and March. It seems to have made three waves up, which was quite bearish for those of you that are Elliottians. 2 weeks ago, we charted an outside week. And then last Friday, we closed below the closing prices of the last, in fact, 4 weeks. That's quite a bearish signal. I still think that we could go up and test the highs of those weekly bars quite easily. The daily chart showing that island reversal that occurred about 3 weeks ago, that's still in play. And the market, in fact, yesterday found support at a 78% retracement of that range, and that support is sitting down around 2,995, and I wouldn't be at all surprised to see the market go up for the next 3 or 4 days, could even make a new high from here. But ladies and gentlemen, this trend that started at the start of April for us is looking mature. I've got a diversified portfolio for you here. Lulu is yoga pants. Couldn't get much more diversified than that. And it looks as if there's one more kick in Lulu, certainly in this particular trend. That pattern is a pattern made famous by a guy called Richard Wyckoff. Looks to me, it's called a Wyckoff spring. Looks to me as if there's legs in Lulu. AMD is back at support, and I think that there's a low-risk trade in AMD at around these levels. I am sweating in the trade personally because I bought it the last time it went back to support. Nevertheless, it's been up around those highs now for 3 times. It should break on the 4th attempt. And the last investment that looks exceptionally good is the GDX, which is an exchange-traded fund of gold miners. Gold price doing exceptionally well. And as you can see, GDX pulled back to the last old top. It actually pulled back in what technicians would refer to as a bull flag. It gapped out of that bull flag and looking very strong at yesterday's close. So those are 3 trades. I re-emphasize that this trend that we've had since the end of middle of March is starting to look quite mature, but there could quite easily be one more kick in it as yet. And those 3 investments are high probability trades with relatively low capital exposure with a reasonable risk to reward. So I hope you found this useful. Thanks very much.